but the financial sector itself has been a very, very, very hot area of the marketplace. It's been one of those, and ever since post-election analysis took hold, and you had the economy reopening up theme, and you had that traditional sector rotation from non-cyclical into cyclical, you started seeing base, energy, industrials. You started seeing these areas of the market really drive the market, right? You look at the last 3 months relative performance. What are the best sectors out there? Energy, basic material, finance, industrials, consumer cyclical, healthcare. Those are your best sectors out there. And specifically in the last week of the market, this sector's went gangbusters a little bit pro financial. I know with all the fintech out there and Bitcoin out there, we do blow off tops kind of don't all look the same. But in a sector like finance, you've had a breakout at 29, and all of a sudden you're 2 weeks later, you're up 10%. That's overextended. And then the banks had earnings today. And the only thing I'm seeing in the bank's response, you got Wells Fargo down today, JP Morgan down today, Citibank down today. On earnings numbers, Citibank, $2.07 versus the expectation of $1.35. And Tim, we'll look at these charts here in just 1 second. Revenues coming in above. JP Morgan beat on EPS, beat on revenue. Wells Fargo beat on EPS, beat on revenue. So what's happening? The only thing that's happening a little bit is just the reshuffling of the reopening trade. That's the only thing that's happening. You're overextended in finance. You're locking in profit in finance off what should be considered fairly decent economic reports to start, not economic reports, but earnings reports to start kind of the earnings kickoff this season. And so you're sitting at support in some of the sectors. You're overextended a little bit. My point is this: there's not a lot of bearish analysis out there, guys. And I said this last week with Bitcoin. You're basically, with Timmy asked me to analyze Bitcoin. I said this isn't a bull versus a bear thing. This is bull on bull crime is what it is. And that's all you're seeing in the short term here as well, is just a little bit of profit taking today on some of the areas that are a little overextended in the market, whereas some of those areas of the market that did not participate this week, that held the market back this week, communications, technology, these types of areas of the market, consumer staples as well, those areas are fighting for support. So you can certainly see some of those areas of the market that have been very important to the market stagnate a little bit. You could see them form high bases. You can see them form a little bit of retracements, whereas some of the areas of the market that did not participate this week, such as basic materials, communication services, consumer defensive technology, industrials, those areas of the market that did not participate in any upward movement in price this week, you can see them starting to pick up a little steam next week because they're sitting at support where the other areas of the market are a little bit overextended. What I'm seeing from an overall price action perspective is the market is still bullish, wants to be bullish, and with all the money we're going to be throwing here this year, you want to be in the stock market this year.